Good morning. My name's Nick Bridgen. I'm Chief Executive of Ferro Alloy Resources, and I'm a joint founder of the company many years ago, and with my partner and now with our strategic investor, Vision Blue Resources, we are developing probably the largest vanadium deposit and certainly the lowest cost project that there's in the space today.
Nick, good to see you again. I think we saw each other last in January 2020, a long time ago. Have I missed much?
You've missed a lot, but we're following a direction that you were probably expecting. But yes, a lot's happened.
Right, and I guess we better start off with the kind of big shifts, which would be the vanadium market. I think at that time, great expectations around what the market could look like. You know, VRFB batteries, a big part of that kind of messaging, etc. But what's the reality been since then?
Well, the vanadium market's extremely volatile. That's just a fact of life. It's because it's a small market and there's not much stock holding, not much trading to average out the peaks and troughs. So if you're in vanadium, you're in for volatility. And at the moment, the price is quite low. It went to a high in a few years ago, went over $30 a pound. It's currently about $5 a pound, but the prospects are good because quite a lot of production is struggling at this price and the demand is rising. Of course, it's been badly hit by the China slowdown, and a lot of vanadium goes into steel and a lot of it goes into construction, and a huge percentage goes into Chinese rebar. So their current troubles have had a very big impact. But the market is sorting itself out, and the expectation, based on the costs of existing producers and the costs of projects in the pipeline, are that it will go back to its normal range, which is somewhere between most of the time it's between $7 and $12 per pound. And I would expect it to end up at the higher ends of that range once this China problem adjusts itself through to production.
Okay, if I don't mind, I kind of want to stick the conversation initially to the kind of the macro thematics and drivers, demand drivers, if you don't mind. So, steel industry you mentioned there. Is that from memory, sort of about 90% of the current demand for vanadium?
Yes. It's falling. The batteries, which is the sort of the big driver of future growth, it has grown to, I think it's now around 10% of the market. And if you look at the main user of high, big capacity vanadium redox flow batteries, which is what we're talking about, is China. And if you add up all the projects that they've announced or have already started, they're going to need 100,000 tons to feed those batteries they've announced, which is big when you think that the market is just 125,000 tons of vanadium a year. Batteries will have a big impact, but currently steel, I guess, is at 85%.
85, okay.
And that also is growing really because it's driven by the fact that steel that contains vanadium is stronger, and therefore you use less of it. And bearing in mind that 10% of the world's CO2 emissions come from making steel in round numbers, anything that drives down that amount of steel that the world produces is going to be used. So the intensity of vanadium in the steel mix is going to rise over time. So for both of those reasons, the demand for vanadium is expected to rise. Obviously, it hasn't reached the point of absorbing all the downfall in the Chinese demand at the moment, but that will sort itself out, and then we'll go back to the normal pricing.
Right. So you think that the pricing trends will evolve? Because I think that one thing we talked about even last time, and I've certainly talked about it with Bushveld and a couple of others, more recently since we spoke, was around the sort of Chinese rebar regulations changing as well. But you kind of feel that pricing trends will evolve, get back to in that sort of 7 to 12 range. What driven by this kind of steel and rebar?
Yes, I think
But
the
you feel
resolvable one is
confident,
steel. I mean,
right?
there is an inexorable increase in the amount of the average amount of vanadium per ton of steel used. So as the world grows and that greater intensity of use of vanadium within steel grows, the demand from traditional sources is rising and will mop up the current surplus. And of course, China may or may not recover to its former growth potential, in which case there'll be a shortage again and the price will go sky high.
Okay, it obviously feels like the VRFB conversation is going on a bit, but for a long time. So you're saying that out of China, there seems to be some manufacturing of these kind of renewable energy storage batteries. It's not right, well, whatever they're used for, whichever type of energy they're storing. This kind of grid scale energy storage is picking up, and where would I go to kind of find information about the rate at which these things are growing?
I'm not sure of an easy source, but certainly the web is full of it. You just do a Google search on them.
Right.
I use for ease something produced by TTP, Terry Pearls, which is available on the Vanitech website,
Right.
and that gives information on the market. It occurred to me I should explain what a vanadium redox flow battery is.
Yep, sure.
It's it's the front-running technology for long-term storage of energy. Now, we all know about lithium-ion batteries, and we all know that they catch fire and that they have a limited cycle life before they deteriorate and their capacity is reduced. And they have certain other disadvantages, like they're difficult to scale. So lithium-ion, they're very cheap and getting cheaper. So for storage up to 4 or 5 hours, lithium-ion is the type of technology that would be used for storing electricity, bulk storage I'm talking about. But if you want to go beyond that, if you imagine a world where most of the power has come from solar and wind, now the wind famously drops for days sometimes, and solar, of course, there's only a few hours each day of peak production, so you need 24-hour storage or even 48-hour storage. Now there's pumped hydro to fill that market, but vanadium redox flow batteries are the ideal technology because they can be scaled, because they're not a fixed cell. You can have the same cell and bigger and smaller tanks of electrolyte which are pumped through the cell, and so they scale better. They don't catch fire, and they don't have a limited life. Effectively, the vanadium stays untouched forever. So if it's a 25-year life of the battery that you're planning, the vanadium is still there at the end of it, can be recovered, recycled very, very easily, unlike lithium-ion batteries where the recycling really costs as much as the metals you recover. So there's a lot of big advantages for bulk energy storage, and some of them are very big. We're talking, the Chinese are producing several at 500 megawatt hours, and they take a big chunk of vanadium to fill. They cover hectares of ground, and very good for the vanadium industry.
Right, so they've got 20, 25 years without degradation, fully recyclable. I think that you can get, this is sort of unlimited discharge cycle. So this is basically used for load balancing. That's the purpose of them, or the idea. Is that right?
Yes, in a way, the world has taken the hanging fruit in terms of going renewable. It's very easy to replace 30% of your power demand, as the UK has done with renewables, because you don't have to store much. But to go above 30%, once you're getting to 60, 70% renewable, you need energy storage because, as I said, the sun doesn't always shine and the wind doesn't always blow.
Right. Okay. So, and we are going to move towards what you're doing and what products you've got and the markets and so forth. But just in terms of just completing this use cases, so vanadium alloys used for aerospace, automotive, etc. Also, I think other uses be in terms of this kind of highly specialized uses, catalysts and pigments and so forth. So is that a big market yet in terms of those use cases?
I think it's collectively it's about 10% of the market.
10, okay.
It is tending to grow because vanadium has interesting characteristics that make it sort of useful for various things. There's some very interesting development going on to use vanadium in the cathodes for lithium-ion batteries, which I'm particularly interested in because the vehicle market is huge. There's sort of around 100 million EVs per year being produced. So tiny bit of vanadium in the cathodes is a huge number. Those other uses are growing.
Okay, and just I want to jump to the kind of supply side, some of those factors, I guess, challenges or constraints, etc. So, how many kind of pure play vanadium metal companies are there? Because obviously a lot of this is produced as byproduct of iron ore and uranium mining as well. And so, who are the kind of big producers out there at the moment?
Yes, well, 70% roughly of the world's supply of vanadium comes from what we call co-producers, and that is the iron ore producers who are smelting magnetite. Iron ore comes in several forms, but one of the main one which you read about, the shipborne material from Australia, Hammersley, etc., that's hematite. But there's quite a lot of magnetite, and magnetite usually contains a small amount of vanadium in it, and so the steel producers who are using magnetite often produce a co-product, vanadium, which they need to balance the books. It's an expensive way of making steel, but it's offset by the byproduct, vanadium. And so that's 70%, and most of that is China and Russia. 30% is from primary producers, and again, most of them are China, Russia and South Africa. So there's a bit of a concentration in areas which are not thought to be reliable. And so as vanadium is regarded as a critical metal in the US, Europe, UK and most countries. And so there is a push to trying to broaden the supply out of China and Russia, particularly.
Right. Okay. And I think you talk about one of your information releases. Talk about Russia sort of flooding the market with discounted vanadium at the moment, it's having a big effect and causing this sort of price slump that we see. Do you think that will continue, and if so, for how long?
I don't think the diversion of Russian material has actually affected the market very much, because yes, sanctions have meant that they're selling it in different ways, but it's still coming into the market, so it's not changing the supply-demand balance. The South African producers appear to be in trouble. Bushveld has gone into the South African equivalent of Chapter 11. Their share price is suspended and there's no news on the market about any production. So I think they've already dropped out. Largo is another big listed producer with operations in Brazil. And I haven't seen their latest results, but they're heavily loss-making in the last year. So I think it's quite clear that the current price can't continue, nor does anyone expect it to, because of that, as I said, the vanadium price is volatile and just tends to go up and down according to exactly current demand.
Okay, well, I guess there's an Australian company, Neometals, which had a vanadium project mated for, I think, Finland, possibly Finland. And they pulled out of that as well.
There are lots of projects. There's over 20 serious ones. But if you look at them, they're all uneconomic, I would say, because the price, they do their feasibility studies at whatever price they can find somebody to forecast, and normally that's $10, $12 or something, and then they're pretty marginal, even at these slightly inflated prices of vanadium forecasts. And of course, all the banks are going to look at today's price and look at the volatility of the vanadium price and say, well, you can't survive a price that has existed for 30% of the last 10 years, and so they won't finance them. So of those 20 projects, I would say, bar ours, there's no obvious candidate that's economic and is likely to be financed.
I guess like a lot of companies and a lot of metals, so this secret here is staying in the game, to be able to play the game while others fall. Something to that. I mean, obviously, with the geopolitical tensions that we've seen of recent years, obviously Russia, war with Ukraine, sanctions happening there, and a supply chain sort of moving east in a lot of cases. That bodes well for ex-China and ex-Russia producers. I mean, one, do you agree with that? And two, so how do you take advantage of that?
Definitely. The end users, sometimes under pressure from their governments, are trying to find diverse sources. So in terms of getting offtake, I think it will be very, very much easier because of that desire to avoid the concentration of supply routes in China and Russia. So I think that's good. But just going back to the point you were making a moment ago, of course, the other reason why we are differentiated from those 20 other vanadium projects is the carbon. We have sort of very round numbers, half our revenue from carbon and expected. And so that means we're far less dependent on the vanadium price at any one time. In fact, we could give away the vanadium and the project would still be economic.
Okay. Well, that's the perfect time to actually get on to. We're going to do definitions before we get into the business model. Okay. So let's look at this CBS, carbon black substitute. What is it?
Right. Can I just jog back and just say what carbon black is? Because everybody knows that. Carbon black is what makes rubber black. When you make rubber, you mix up latex.
Car tires, we're thinking, aren't we?
Car tires, rubber tubing, nearly everything which is rubber is black. And the reason it's black is because it has carbon black in it. And the way you make all rubber is you cook up latex, carbon black, and probably silica. The carbon acts as what's called a reinforcing filler. It makes the rubber stronger and it bulks it out. So it does both jobs. You can sometimes hear of things which are fillers, but they don't reinforce. I guess there are reinforcers that don't fill, but I'm not too familiar with them. So carbon black is carbon, and its characteristic. It's a very, very fine powder. It has very, very small particle size, and that's the key to its reinforcing characteristics, as well as the carbon. And carbon black is usually made by the incomplete combustion of hydrocarbons. So you get gas or oil, burn it in a depleted oxygen atmosphere, and the residue is a small particle size. And it's a very messy, dirty business because you're burning hydrocarbons. So it produces not just lots of CO2, but also other noxious gases. And the front line producers, who are the cleanest, produce about 2 tons of CO2 per ton of carbon black product. Emit rather, not produce. Now that's carbon black. Now, obviously, that's the rubber industry, the tire industry is looking for ways of reducing its CO2 emissions and saving costs, because carbon black is a high-value product. It sells for the price depends on the oil price, but it's nearly always about $1,000 a ton and can go up to, for different grades and in times of higher oil prices, can go up to much higher than that.
And just to be clear, high value equates, as far as you're concerned, to high margin.
I'll come to that. Not for the traditional.
Not necessarily.
Carbon black producers, because they're having, in fact, it's probably a low margin product because they're buying the hydrocarbons, burning them, most of it going up the stack as CO2, and it's quite competitive. So I doubt that it's an extremely profitable business. It's all over the world, but it's high cost and expensive. Now, our material, that was a long preamble to describing what our CBS is. We call it CBS carbon black substitute. We have naturally occurring carbon in our ore. It's sort of 8 to 14% typically, in that range, depending on how we mine the material. And we can concentrate that material to about 40% carbon. And that carbon is physically and chemically very similar to carbon black, but it's naturally occurring. So we're not manufacturing it by burning hydrocarbons. We're not emitting any CO2 in that process. All we're doing is recovering it. Now, we will take out vanadium from our ore, and from the tailings, which is already milled and already had the metals taken out of it, we will recover these tailings, put them through a concentrator, a very simple process, very low cost, and produce this 40% carbon concentrate. And that material, now we've done a lot of work with consultants in Kazakhstan, Belarus, and most recently in the UK with a major rubber consultant, and they have found that material milled to 10 microns behaves in a very similar way to traditional carbon black. And our cost of production is tiny because all we're doing is recovering it from tailings, concentrating it and milling it. And there's all very, very low carbon emissions. And we've been advised by that same consultancy firm that has a marketing division that the value of our material, by comparing it with other reinforcing fillers available on the market, should be sold at about $500 per tonne or more. We can produce from our phase one, that's, remember, a small part of our eventual total, we can produce about 220,000 tonnes of this concentrate, and multiply it out by $500, you get to $110 million per year revenue, which is extraordinary at very low cost.
What's the total size of the market, Nick, for carbon black?
The carbon black market, I've seen figures quoted between $20 billion and $30 billion per year. It's huge. And 70% of that goes into tyres. Tyres is the big one. But there's other big markets as well. And lots of rubber products, as you know.
Right. And so you talked about your hopeful potential production numbers, but how do you insert yourself into that market? You've got to get people to test this product, approve this product, insert it into their own flow sheet. Where are you with that process?
We have actually got a pilot project going. We've put the equipment in. We haven't started it up yet, being assembled now. But we've got a pilot project to actually produce carbon black substitute, which we can then try and market. But in the meantime, we have actually, people are coming to us. I mean, we've attended a few carbon black conferences and things, and there's a huge amount of interest in this product, and because it's what the industry has been looking for. They have been playing with what they call recovered carbon black, where they take tyres and through pyrolysis can recover the carbon black. But the problem with that is it uses as much energy to recover it as it saves in making pure original carbon black. So it's not a good product. It's also not as effective as a filler or as a reinforcing filler. So,
are you going to be cheaper than carbon black, or are you going to be more expensive than carbon black?
No,
right. Okay.
Cheaper. Well, I mean, roughly half the price.
So you're 500. It's normally 1,000 for carbon black.
As I said,
okay.
the sort of earlier, the low level of carbon black. It varies.
Right. Okay. So you're going through the usual sort of pilot testing approvals process. Is anyone testing any of the lab level stuff production before you kind of get into pilot level volume at the moment?
Well, the difficulty is that in order to make samples, we have to simulate in the laboratory the whole process of recovering the vanadium, taking out the other metals, and we've done it at a fairly small scale in order to do the test work with the rubber consultants, but I think I've alluded to this, that is very successful. It has demonstrated that we can use our material in place of carbon black in partial replacement with no diminution in performance. So that the selling proposition...
What's partial replacement?
Well, Well,
What does that mean?
if you want no deterioration in performance at all, we can substitute up to 10% of the carbon black in making it goes into tires sidewalls. Now there are pluses and minuses. There are, in terms of rolling resistance and abrasion resistance, our material actually outperforms standard carbon black. So different manufacturers of different products will look at the characteristics of our material, and bearing in mind that it's much lower cost, much lower CO2 emissions, and the advantages and the disadvantages, they'll feed it into their mix in different proportions. It can certainly go well above 10%.
Is this 10% that you would blend, or is this?
Yes,
what do you mean by 10%?
Normally blend it. It's very commonly done in the tire industry to blend different materials.
So they would weigh up things like, well, this is half the price, so that's good, but it will make the tires last a bit longer, so we lose a bit of sales there. So we don't like that bit.
I think that would be regarded as a plus.
No. You say that it's not, because they want people to burn through the tires quicker, or to tires to wear out quicker, presumably, because then they can sell more to them. But if you're giving longevity to the tires, it may not be seen as a plus. So these are the sorts of questions I wonder what they ask.
I understand the logic, but yes. Okay.
Okay. Who knows? We're not tire experts. In terms of
the Michelins and the Goodyear and all that, they tend to have a longer life than cheaper tires, and that's one of their selling points.
Right.
So I think it is a quality market, and probably quite slow to move.
That's what I'm getting at in terms of this trial process, and more importantly, certainly with anything to automotive, to kind of factor in a new process, a new material into their flow sheet. It requires a lot of sign off from a lot of people. In terms of maybe eventually having certification on this, or some kind of industry approval of this, is that a kind of broader ambition of yours?
Certainly, yes. I think that the quality tire market will take time to crack, but there's a huge market for lower quality or agricultural or truck tires, which are not as performance orientated, and other rubber products. So I think the likely progression is that initially we'll be selling to these lower quality markets, and as we get certified, people get comfortable with use of our material, it will then move into the high quality areas. But it's a big enough market for us to find our...
Okay, so that's the CBS. You're in process. There is in process there, and potentially 50% of your revenue could come from that. We'll be interested to see how you progress with that. In terms of the competition, other people doing this in terms of CBS, or if that's your name, similar versions of this, it may reduce your ability to sell into this market. How many players are out there doing this?
Nobody's doing it in any scale.
Right.
We the original work on this was done by some university professors here in Almaty. Sorry, I'm not actually in Almaty, but that's where I usually live. And they have worked with another company that sells a very small amount of a similar idea. So that's how we sort of got onto the idea. But our product is actually very much superior to that one, because of the background mineral is mainly silica, because the carbon is in an ideal form. Ours is a quality product, but it has been done on a smaller scale by this other company in Kazakhstan. But I'm not aware of it being done anywhere else. I think you need a rather unique set of parameters, constituents of the ore, the carbon being in the right form and the silica, to actually make a good product. And we have that magical combination of materials.
Right. And do the tire / the rubber manufacturers, are they talking directly to you? Is there some sort of intermediary process? And do you have the people to kind of, sell into that ecosystem?
We haven't secured an offtake agreement yet, but we're talking to a lot of people.
But you're doing it yourself in-house. You're managing in-house, not through some sort of trade.
We're managing the process in-house, but we have used probably the foremost rubber consultant in the world to advise us on the technical characteristics and the marketing. But yes, we're handling the arranging of offtake ourselves, largely because of people are coming to us. It's an open question whether we'll use a marketing organisation. Certainly this same organisation, there is a phase 2 of the marketing study that we're talking to them about, where they will more systematically advise us of the target markets which are suitable for our product, the easiest ones to enter and where they are. And then, of course, we'll include that in our existing logistics study to work out where we can deliver to economically. So there's a ad hoc process going on, which is just reactive to people that we know are interested in our product. And there's a systematic process, which is going to take a little bit longer. That will require bigger samples.
Exactly, bigger samples. And I guess it kind of tries towards sort of people trying to understand the production timelines, the sales timelines. That you said it take a while maybe to crack the kind of quality time manufacturers. The cheaper ones maybe are enticed by the fact that they're spending less money than they would on carbon black.
Well, I think
give us.
Well, I wouldn't say we're positioning ourselves as an inferior product. We are saving CO2 emissions, and the product gives rubber of equal or better performance.
Absolutely. So there was nothing from me suggesting that it's inferior. Just the fact that the pricing would be very, very attractive. I imagine. Well, you said it. To market. I'm just trying to get a sense of the timing. Then, in terms of when this thing actually, is a revenue flowing, or at least near-term revenue flowing product line for you guys. What does that look like if I'm looking forward on the CBS?
The original plan, the current plan, and it is that we will publish the feasibility study on the whole project. That's vanadium and the carbon later this half year, so by June, and then we'll finance the whole project, and we'll be making vanadium and carbon at the same time. But then the sort of success of the carbon program, the technical work that's been done, the marketing work that's been done, does open up a few options that we are sort of considering of whether we can accelerate the carbon.
What does that mean? Because obviously making it and selling it are two different things, right? So the vanadium market, I think, established, whatever the machinations of the price at the moment, but carbon black is a new market for you guys, and this is you said it's a equitable and cheaper. It's equitable in terms of performance, but cheaper product. But it will take time to break into that market. I'm just trying to say, a lot of companies we saw last year that could demonstrate a near-term revenue profile or revenue profile were being rewarded by the market in terms of liquidity, volume of trading, stock price moving, etc. So, give me a sense of the timing on the CBS stuff, if you don't mind.
The base plan is that it's just going to come with the main project. And the timing on that is the same for the big project. We'll announce the feasibility study by June, and then we'll finance it in the normal way. That normally takes a few months, and construction takes 18 months to 2 years. So you're up to beginning of 2028 to go into production with vanadium and carbon. Now that's the base plan.
But again, I was wondering if you could help me understand, because I'm not getting it. Is, like, say, making it, producing it, it's not the same as selling it. It doesn't convert into money if you get out of the ground. So that's the bit I'm trying to get to.
Yes, in parallel with that, we're talking to off-takers. We've got lots of conversations going, and we're trying to make samples one way or another. But that's what this pilot plant is for. It will make lots of samples, which we'll be sending out. So the idea is that by the time we go into production with the big project, we have already got off-takers and we can sell it from day one. And there's it's a huge market. So I don't think there's
Is that prepay you're looking for?
The ideal, of course, when you're looking at offtake agreements, the ideal is that you get somebody to say, yes, we'll put a whole load of money in to prepay and help you with your construction costs. That's of course our ideal. That will come out in the wash as we negotiate with these various parties.
Right. Okay. Well, a lot of negotiation to happen, and then obviously on the vanadium side is well established routes to market out there, well understood by your team presumably. And can you get support from that side of things, given where the pricing has been over the last few years? I imagine banking might be a little bit nervous, but from industry, will there be any help?
Yes, I mean governments are supporting critical metals. So if depending on where we end up selling the material to, we can access preferential funding mechanisms in the EU, for example, and that's something that we're working on.
So DEU,
European market.
What's the D bit? Sorry.
Oh no, there's no D. E.
Oh, they said DE. You said and EU. Right. Okay. Fine. It's like old age. I'm getting old, so I can't hear. Okay. So let's talk about EU in relationship with Kazakhstan, because on the uranium side, which we're doing a lot with, and on the oil side, we see all of the products seem to be very closely associated with Russia, and a lot of product heading east into China as well. So in terms of funding, getting Western funders into Kazakhstan, you don't think that's an issue? Maybe EBRD possibly, but who else?
Oh, lots of the development banks are there and very interested in Kazakhstan. EBRD is it's a priority area. ADB and there's the Development Bank of Kazakhstan, we have good relations with, and they have said that they will want to be involved, probably alongside another multilateral lender. Or there's what we loosely call the debt funds, which is companies that lend to projects like this. They're very interested in vanadium and Kazakhstan. So I don't see any special difficulty. Kazakhstan is a good jurisdiction now, and it's strategically important to Europe and the UK in that it is a source of huge mineral wealth that can dilute the importance of China and Russia. So no, I think Kazakhstan is an advantage more than a disadvantage.
Right. Okay. And so, I mean, how do you see yourself in the future and positioning yourself? You're a mining company. You're not a sort of technology company. There's nothing sort of clever about what you're doing. And I know CBS is, you could potentially argue, is a bit more technology driven, but I'm just thinking multiples moving forward in terms of how the market views you. Is it that we're investing in a mining company here, right?
Absolutely. No, right, we're not a mining company. For example, we're not going to start making batteries. Lots of people say, why don't you? And I say, because we're not a technical company. I mean, we're quite sophisticated as a mining company. Our vanadium recovery process was developed in-house by our technical team, and it's extremely innovative. It's not really true to say that mining is the opposite of high tech, but no, we're not a high tech company, and it is a mining company.
Okay. And maybe just sort of finish off, and if you don't mind, sort of give us a sense of the sort of economics of where you're at the moment. Obviously, we're like I say, you've seen the highs, you've seen the lows, and it's been a sort of long sort of four years, but the end of last year, people are, I guess, recognizing that you're moving towards a feasibility study, and you've got a bit of a reaction in the marketplace. But what should we be looking forward to as investors or potential investors in this company?
Well, the huge news is the feasibility study. Now, if I can just remind everyone what we said in 2018 when we listed, the project will be the lowest cost vanadium producer on its own, ignoring the byproduct or co-product carbon. The carbon on its own would pay for the whole operation. This is an extraordinary project. financially, and it's very, very large. We haven't actually covered that, but our phase one is based on one ore body, and that has a over 20-year life on that one ore body. But we have 7 ore bodies. We've drilled out second, third, and fourth. Haven't yet got the assays results, and then there's another 3 ore bodies already known on our site. So we have the potential to go 7 times bigger than phase one. I mean, we don't know what the end result will be, but this is a huge deposit. It does transform the vanadium industry because our cost is so low. I wouldn't like to be in the shoes of those 20 other projects with highly marginal cash flow forecasts when they see us coming out. So the huge news is the feasibility study and quite how profitable that's going to be, which was foreshadowed in 2018. We knew about it then. The carbon has got more important and more valuable since then, but it was there. So I'd urge anyone to dig out that 2018 stuff, and pretty much we are where we said we'd be.
Right, and that's just to temper that somewhat, because like you say, like building up big and flooding the market isn't necessarily a good thing either. So project number 1, great, get that going. What because there's a lot of kind of private production as well, and obviously, you know, as a byproduct with, you know, we mentioned iron ore and uranium. What are the kind of potential red flags or dangers or things that could halt your expansion and your ability to kind of take advantage of this marketplace? What are you looking out for? What are you saying to your management team? Look, let's be careful about what.
I think it's relatively, obviously the market. You know, you don't want to be flooding the market right now. But our production from phase one is going to be less than 4% of the market. It's not going to destabilize the market. But we could, and the reason we did the first phase quite small is because there's obviously a learning curve. Once we've done phase one, we'll know how to do a much bigger project with a lot more safety from an engineering point of view and from a marketing point of view. We don't want to flood the market from vanadium. But carbon, of course, changes that story. The carbon market is huge. And so perhaps we'll expand quicker than we would otherwise have done, just knowing that the phase 2, 3, 4, 5, and 6 are all economic because of carbon, no matter what we do to the vanadium price. But at the moment, there's a lot of growth forecast in vanadium. We think we're going to satisfy the growth, but no more. And what other things to look out for? The feasibility study, of course, is so big; it's more important than everything else. But we have an R&D facility. It was the original pilot plant. We do produce vanadium today from bought-in concentrates, but that's not the main business that we're in. And I've mentioned that we've got the carbon pilot plant that we may be able to expand up and make some decent cash flows out of before the project comes on stream. This is work in progress. I'm afraid I can't. There's nothing announceable right now. And we've also got an electrolyte R&D project. We're going to be able to convert our existing production into high purity V2O3 and V2O4. Now, those are the materials that you make electrolyte from. And the idea is to position ourselves. We're not going, as I said, we're not going to make batteries, but we want to be there ready if this huge demand from China picks up on vanadium flow battery electrolyte. We want to have a product there in the market. It's a way of selling vanadium. It's not a different business, and so that we can do really from, I think, around May. That pilot project will be ready to. We're positioning ourselves for. We're very lucky to have existing production. It means that we are able to do things. We're not just a paper company with a feasibility study. We are actually physically developing products, developing our expertise, developing markets, and of course we'll have the workforce ready to start up the project. It's not a greenfield.
Yeah. No, I guess I guess the usual things apply here. In terms of risk, it's like you're building a mine and building and operating a mine. financial exposure in terms of getting from the heat where you are today to there, and managing that in a market which has been volatile, trying to understand what the competitive environment looks like in terms of supply into the market. So no one wants the kind of market to be flooded. I think you've explained the kind of maybe reason why Kazakhstan as a jurisdiction is not so it's not onerous, but it's also maybe nothing to be concerned about, and ultimately you will work out commercial realities of the marketplace with both sets of products. But I think Nick, for kind of, well, it's been 5 years, so it's good to see you. Good to kind of get a recap on where you're at and what the opportunity is in front of us, and look forward to seeing the feasibility come out, and if there's more news, be happy to have you on. Maybe we can dig deeper into some of those factors I just mentioned.
That would be good. There's going to be lots of news in the next few months, so I'll take you up on that.
Brilliant, Nick. Thank you very much. Speak soon. Cheers. Bye.
Thank you.